Good morning, everyone. It is Monday, September 11th, 2023. Yesterday I did the Pythagorean diatonic ratios, showed how to take a price range and a low and convert that to time to get some time projections and hits. I said I was going to do the same thing for price, but I'm going to show something a little bit different. I'm going to show you how to basically build up a price and time square using these ratios and using basic fib tools, your fib price retracement tool and the time extension tool, which are built into about every platform nowadays. So you can do this with any particular trading platform. So what I've done here, I've taken the fib tool and I've input the diatonic ratios into the plot. So I've put the 12 and a half, which is the 9 to 8. I've put the 25, which is the 5 to 4. Put the 33 or the third in, which was your 4 to 3 ratio. And then the 38.2 is close to the 375, which is the 3 to 8. I prefer the fib ratio of 38.2 and 618 over that. And then, of course, the 50%, which is the 3 to 2. And I didn't plot any higher because that was what was containing the price action off of this low. So there's a couple of different ways I like to do this. I'm going to set the 0 point of the tool at the level of the low, where I've got the blue horizontal line. And then I'm going to take a look at the last swing down, and I'm going to drag the tool up and set the 12 and a half at the high of the last swing down. And that's going to set up the structure moving forward in time. Now the other way you can do this is you can set it at the 12 and a half at the first swing up. So maybe I wanted to take a look at the initial impulse up, which would have been to this high right here, or I could even take it and set it up at the next high over here. But in this case, I like the last move down into the low or the last low into the high. So I'll do an example of each. So very simply, once this low is established and somewhere around the area of this high, we can then set the tool up and then set the 12 and a half here. And then that gives us all the levels for the future in that particular active structure. So what happens when we hit the 25% level, we get a high here, and it kicks the market back down to the 12 and a half level. That area at the 25 is then challenged again. It hangs around there, gets rejected off of there 3 times, and then breaks back down to the 12 and a half level again. The 25 level is then attacked, rejected again here, attacked, rejected, and it finally breaks, becomes support. Then it goes up to the 33 level, gets rejected from there, breaks through that, becomes support, and then goes up to the 382 level. So you can see the impact that that's had on this particular market since that low was made in October of last year. Let's switch to another example and take a look at a move down off of the recent high. Now here's a chart. I'm going to work off of the high from December of 21, which at that point was the all-time high. And I'm going to take the first impulse down. So in the last example, I took the last high into the low. In this particular case, I'm going to take the first initial push down and set that as my 12 and a half point. Then you can see how the market worked off of those levels going through there. The 25 was initially breached and went right down to the 33 level, kicked it back to the 12 and a half, made a double top, came down, rejected off the 25, back up for a couple days, down, broke the 33, went right to the 382, back to the 25, to the 33, double bottomed at the 33, ran back up to the 12 and a half area. And then you can see how those areas work. The first time the 50 was hit, rejected that twice here and here, back to the 33. Notice what happened here at the 33. We had a little consolidation, and then it broke, rocketed down. It gapped through the 50 and went right down to the 6.2 or the 618 level. So you can see how these levels have had quite a bit of impact throughout there. And each time a level was hit, it rejected the market. The only exception was at the 25 here, where we've got this strong, huge wick all the way through that actually took out the 25 and went to the 33. But then after that, the 50 held twice, or the 38.2 held twice, then the 50 held twice, and then the 6.2 held and rejected. So each one of those rejected back to the prior level, which, obviously gives you a target to work with. So now I want to do one more thing. I'm going to pull up one more chart here, and I'm going to put in a time. I'm going to do the same thing I'm doing here with the Fibonacci time tool to show how you can get price and time coming together. So you can basically use this as a price and time square out technique to set some trades up with. Now the last chart I'm going to show, I'm going to use the same price pattern as I had on the last chart from that December high. And what I'm doing here now, I'm taking a fib time tool. You can see the ratios at the bottom. I've got the 12.5, 25, 33, 38.2, the 50, the 62, the 67, the 87.5, the 100, and I extended that a little bit to the 112 and the 125. You can carry that out further and build your octave out. Anyhow, what I'm doing here in the octave, this is the 0 point would be your do note, the 12.5 is your re, your mi note is the 25, the 33 is the fa note, the 50 is the so note, and so on down the line. But to set the 12.5 in time, I started the 0 point at the high. The actual high was on this date on this bar, and I took that first big swing down, and that first swing low is right here at the 12.5 level. Now that gives me all these points going forward that I can look at where price and time may come together. So what happened as we had that first point set, we're looking at the second time point, which is the 25. The market traded back up to the 12.5 level at the 25 point in time one day before. That gave you a time and price confirmation that kicked the market down 2 levels. It found support at the first level, came back up, went down to our next time point, made a low at the 33 level in price and the 33 level in time, right where my cursor's at right there. That kicked it back up to the next time point, which was the 38.2, and that breached up above the 25, but the time point kicked it back down. It went down to the 33, did a 1 day gap through, and then came back up. The next time point, the 50%, really didn't give much. It was just a 1 day low before it moved back up. We got a low at the 618 level, and we got a high at the La level of the 67, and then that kicked it back down. The next time point came in. We had a low right here at the 50, at the T note of the octave, and that kicked it back up 2 levels to the 33. Right here then, when we hit that little triangle point, which I mentioned when we were looking at the price chart, the triangle ended and the breakout came at the time point. So when we hit the 100% of the octave in time was the day that the breakout happened and took out the bottom of the triangle, and you got this acceleration down with the gap through the 50 and all the way down to the 62. Then when we got back to the 112.5 time level at the 50% price level, got another short trigger down. Then the 125 didn't give us anything. It just traded right through that point. But this is really a core technique, very simple. You can set this up. You can set up your fib tools. You can do a price projection and a time projection, and it's going to show you how to square up price and time diatonically, and you can see the important levels in price and in time. And this is really a very simple, basic technique, but you can actually build a trading system off of this, because this is going to give you good price and time projections. And when you get the price and time projections coming together, when you hit the time point at these price levels, the market's going to turn and give you some really great trading opportunities. And you don't have to do any deep thinking or major calculations, because you're simply doing this with the plotting tools, the drawing tools that you already have in your platform. And this is going to give you some great trade setups. And the beauty of this also is this is a universal technique, because these are primary ratios that work in every market.